Simplicity, true simplicity, is, well, you just keep on going and going until you get to the point where you go, yeah, well, of course, where there's no rational alternative. Jonathan Ive. And Jonathan is absolutely correct. What you keep doing to get things as simple as possible, but not simpler, is to keep honing things away until you get to the point that nothing else can be taken from it. That is what we do here. You notice how simple our charts are. They're as simple as they can be, but not simpler. They're simple and they work. We don't have the problem that so many people, investors and traders, have, and that is where they have analysis paralysis. You can have dozens and dozens of indicators. I'm going through the list now, from accelerator bands to commodity channel indexes to the detrended price oscillator, the Elder, Ray, Bear, Power. I mean, I keep going all the way to the very last one, the Warden Stochastics, and everything in between. So what do? We use the price percent oscillator and we use the derivative oscillator, along with our trend lines, our Bollinger Bands, and of course, our Heikin Ashi candlesticks. Let's jump into these charts. Everything is down for the day. And I'm going to show you when we get down to the 4-hour chart, the range that we are in and what may be happening on Friday. We talked about this yesterday. Remember, 10 to 15 minutes a day is all we ask if you want to learn how to read these charts. And just imagine if you become a charting master, where these are like a roadmap to where things are going in the future. Imagine what that means to your pocketbook. Unlimited money is what it could potentially mean. So again, this is the most important 10 to 15 minutes a day you spend for your financial health and wealth in the future, particularly with the coming market crash, when everyone else is losing everything and you're making more than you ever dreamed and not losing. So let's jump into what we see going on. We start with the weekly chart. We still have the pressure of a weekly vertical crossover going down that has been so good to us. We see that occurred back on the 9th of August, and it is still in effect. Price percent oscillator still headed down, derivative oscillator headed down. We have a green spinning top right now, open box. All the movement is within the prior solid green, which again is a cautionary on the down slope. It is not a solid red, but it's not an open box, which typically are the strong up movement candles. But the candle that we have right now, totally within the prior red down candle and the prior solid green candle. So again, totally contained within that. We see a wick on the bottom, wick on the top, spinning top, indecision, tending up. Now as we dig, but remember, price percent oscillator, our main indicator, still going down, derivative oscillator gaining downward momentum. Go to the 2-day chart. And again, this is the first day of the latest 2-day candle. It's moving up, but not super strong. We see that the price percent oscillator is still negative. It is trying to move up some, still negative, hasn't crossed over. Derivative oscillator losing downward momentum. So for the last 3 days, we've had up movement as far as the 2 candlesticks go that we have so far. And again, this first one's just first day of the latest 2-day. We have pierced the 2-day trend line, okay, which again is going down. Now, when we go to the 4-hour chart, this is what I want you to pay attention to. We look at the 4-hour chart and we can see where things have really sort of topped and stopped right around the 292.47 mark. 292.47. We're at 292.31 at the close, and things have just hit that mark and slid along right below the 50-period moving average line. Price percent oscillator still heading up. Derivative oscillator still positive, losing energy. But again, watch that. What's going to happen? something is probably going to happen on Friday. Either things are going to pop up and start moving up strongly again, or everything that all the downward pressure is going to reassert itself and everything is going to roll over. Look at how far back we can go back and find this support, all the way back to the 2-day candle on the 8th of August. Things have just popped up there and held. So what's going to happen? Do you think it's going to pop up again? Now the last three candles are red candles. Again, for the day on Thursday, we have 2 red spinning tops, almost dojis. Price percent oscillator is heading up. Derivative oscillator is losing momentum. Let's just see what happens. Now, we're not betting on this. I'm not putting in put trades or buying SH at this point, but it sure looks like the downside could happen. But news could come in and things could pop up. We'll let the charts lead us. What are we hoping for? Well, of course, a down move, since we're triggered to jump into that with the 2-day confirmed down and the weekly. That's what we want. We want to see strong down movement in the morning. So we've got a 4-hour crossover and we can jump in and write it down. We just don't have that yet. So we're going to watch, see what happens. Pretty similar on the Qs. I was watching the Qs hoping that something might happen throughout the course of the day. Down in the morning, then popped up in the afternoon, then right at the end of the afternoon, started accelerating down, all the way down to 0.35 down, ended up 0.31 down. What do we see going on the weekly? Looks somewhat similar, green open box candle. Again, right there within the bounds of the prior green candle and the prior red candle over the past 2 weeks. We see the derivative oscillator gaining downward momentum. Price percent oscillator still heading down. We go from the weekly to the 2-day. What do we see there? Well, we actually have now 5 days of up movement. But again, things topping out right there. We can see around over the last 3 days, topping out 188.35. You're going to see a little more in a second when I take you to the 4-hour chart. But we're still negative on the 2-day price percent oscillator, derivative oscillator losing downward momentum. And look again what we see here. We saw where things topped out and sort of banging off and moving down off the 50-period moving average line. And we're somewhere around the 189 point. And again, that's been the terminus of the up movement so far, around 189. So we're continuing to watch. We still have the price percent oscillator edging up, derivative oscillator losing downward momentum. But is that 50-period moving average line, or at least the 190 or so, 189, is that mark going to be the top? And are things going to roll over and go down in the morning? They just might do that. We'll wait and see what there is to see on the Qs. Keep your powder dry. Pay attention for a potential practice trade on the downside. PSQ is the inverse fund that you could look at. QID is the double inverse. Again, got to know what you're doing, but PSQ, single inverse, and of course SH is the inverse for the S&P 500. Those of you who don't know what I'm talking about, please go watch our video, and I'll put that at the end of today's video. You'll see a link to it. In fact, I'll put it in the show notes also. A link for our subscribers to inverse funds, what to do when markets crash. Now, we're going to move on to bonds, which are trying to restart their up movement. They were down for the day 0.65%. We have a red open box candle. Again, not a solid red down candle, a cautionary candle for continued up movement. Price percent oscillator still heading up. Derivative oscillator gaining upward momentum. Prices above the weekly, below the 2-day. We go from the weekly to the 2-day. What do we see happening there? Well, of course, first day of this latest 2-day candle has breached the 2-day trend line. It's a red down candle, down 0.65%. Price percent oscillator on the 2-day chart still confirmed up, but appears to be heading down. Derivative oscillator losing downward momentum. Price is still above the weekly quite strongly. And then what do we see on the 4-hour chart? Remember, we sort of had this area. It tipped all the way down to the low of 144.08. Where'd we hit today? The low was 143.83, so it's really already moved below that and pierced the 2-day trend line. So not sure where we're going on bonds. We're not getting a stop there, not much of one. So anyway, we'll see. We'll see how bonds, if stocks do drop in the morning or throughout the day on Friday, you might see bonds pop up just because what? They tend to be more of a safe haven when stocks aren't doing well. We can see the derivative oscillator gaining downward momentum, price percent oscillator heading down. So again, waiting for bonds to sort their way out. But my friends, was that jumping in point not absolutely fabulous for that magnificent run up of what? Almost $11. It was beautiful. That again is the magic of the weekly vertical crossover. That's why you want to be primed and ready to jump into them on your practice trades the minute they occur. Okay, what's going on with gold? Gold, of course, a little bit pulled back for the day, 0.25%, not as much, less than half again as much as the 20-year bonds go. We see price above the weekly, below the 2-day. Price percent oscillator still heading up. Derivative oscillator losing upward momentum. Go to the 2-day chart, and that's where we see that sideways slide again, well within that candle back on Thursday. On the 2-day chart, that's representing Thursday the 14th, Wednesday the 14th, Thursday the 15th. So again, a sideways slide underway in gold, although that price percent oscillator is trying to cross over going down. Now, it could bounce off like it did back on the 2-day candle ending the 16th of July and head back up again. We're just going to have to wait and see what happens. Price percent oscillator heading down, getting close to a crossing over. It looks like derivative oscillator heading down. We'll see as we move, as this candle closes out. Perhaps it will cross over or bounce off and pull away. We'll let the charts lead us, right? Charts tell us what to do, not what we think is going to happen. And what do we see here? Maybe a floor. Maybe a floor around the 141.25 mark or so. We'll see if that ends up being a floor on gold. Gold may just continue to move down and that mean nothing, but we will keep our eye on gold. Price percent oscillator still negative on that 4-hour chart. Derivative oscillator losing downward momentum. And of course, throughout the day, 2 red down candles. So we'll keep our eye on things. Hopefully we'll get some determination as to where things are going on this Friday. We'll wait, watch, and pay attention. Folks, if you haven't purchased our book, we have the 12th edition signed and autographed, ready to come out to you. We so appreciate your support. You want to support the work at the channel? That's a great way to do it. I finished my work on the options, the first Options Made Simple, my first options training for you. You want to get that? How do you get it? I'm going to be sending it out to all of our subscribers at the channel. So go to chartingwealth.com, chartingwealth.com, subscribe, doesn't cost you anything. Put in your name, email address. You're going to be the ones getting it. I plan on sending it to you over the weekend. You're going to love it. I sure hope. It's about 30 minutes, and I give you the down and dirty on what you need to know about options. You know what the main thing is? You got to be able to read a stock chart. You're going to lose your backside, but if you can read a stock chart, you're going to love options. You're going to love the ability to multiply your earnings. And again, starting with practice trades in options, you're going to absolutely love it. I can't wait for you to have that. Appreciate all the new Patreon members that have been signing up. All sorts of great stuff for you. In fact, I've been thinking about my Patreon members and something special I can do for you. And I'm going to give you a special training that I'm going to record in the next few days. I've really been thinking it out, and it is about how to analyze any ETF or stock and figure out if it is trackable and tradable. How do you do that? And what are the most important things you pay attention to? It's going to involve things about time frames and about crossovers, not just weekly. Some charts, the weekly crossovers don't work really well for us. Other charts, the daily, the 4-hour, the 3-day, the 4-day. There are all sorts of ways to analyze, and there's plenty of stocks and ETFs that aren't worth trying to trade because either they don't move enough or they're too erratic. So I'm going to be breaking that down for our Patreon members, and I look forward to giving you that special training for our special friends who help support all the costs related to the channel. That's what our Patreon members do for us, and we so appreciate you. You want to know more about that? You can see the link in the show notes. Same with folks who want to buy the book, link in the show notes. The book breaks down everything you need to know to get started with us with the work that we do here at the channel. You want to put your training on steroids, then get the book. See the link in the show notes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.